Hello and welcome to the Good, Bad and Ugly weekly review of 24th of May, an exciting week that went by. But first, please read the disclaimer. By proceeding, you are acknowledging and agreeing that returns displayed on this platform are provided for information purposes, not intended to serve as advertisements or promotions. This week from the Weekend Investing Research Desks, these were some of the stories that we published. Very good insights into the bond market. Then there was a story about gold moving out of weak hands and the prospects of gold in the next one. Emerging markets versus uh, developed markets. A study was shared on May 22nd. Um, the usual sort of fear that people have at market highs, a context on that, what has happened in the past after previous market highs, India's path to glory, some numbers based projections here, some great FI news in another story, and checking the right benchmark is important, what you should compare your portfolio with, and how to, of course, outperform it. So you can view videos or read blogs on all these articles on the Weekend Investing app. You can get them on the Google Play Store or the Apple Store. Nifty this week was a remarkably strong week. I was expecting a up move for the last many weeks, but I was expecting it more nearer to the date of elections results. But this has preempted the election results. We are now at an all-time high. This one move that came on Thursday has really set the bears or most of the FIIs who were sitting in short positions. So FIIs have built a significant short position over time, and some of that got unwound on Thursday here. So it's good that there are shorts in the market at all-time highs that always provide a cushion in case the market falls. And you can see the move very clearly on a weekly chart, and you can see that for the last about 10 weeks, we had been stuck in a 11 to 1200 point range, which seems to have broken out now, and there could be a significant move up. It is almost like this July to November period where you were in this 1000 point range and then a significant move up. A similar move could happen right here. In terms of the benchmarks, Nifty moved up 2.2%. CNX 200 and CNX 500 were also along with Nifty. Mid and small caps were not participating this week much. So mid and small cap index up 1.2% and small caps were up to 0.5% only. And the star performer again was Nifty Next 50. I am continuously saying that this index is just performing beautifully. And our product, MINNF10, which tracks this index, is doing extremely well. So 6.3% this week itself versus 2.9 on this. And already NNF10 is up 20% for the year FY25. Even MI20 is not too far behind, 19.8%. MI35 is at 17.4%. These are big numbers for just 2 months gone by in the current financial year and coming on the back of near triple digit returns for FY24 also. So HNI Capital Compounder, ATH, all doing nearly 5%. MI Evergreen, top 10, ATH2, all doing near 3%. MI35, bit muted, 2.2%, but still much better than 0.5% on small caps. HNI Wealth Builder, MI30 and MI All Cap took a break this week and did not perform at all. Sectoral overview, public sector enterprise stocks continued to rule the week. For FY25, up 18%. Metals up 3.9% again this week. They're up 20% this financial year. So metals have done the best in the last couple of months. PSU banks, energy stocks, and commodities also rallying very hard. So there was an overall rally. I would say FMCG, pharma did not participate. but everything else was moving up. Even private banks did quite well this week at 1.6%. IT is recovering fast. It is now down only 3.1% for the financial 25. You can see the sectoral momentum across different frequencies of measurement. Public sector enterprise, metals, real estate, and autos. These are some of the top ranking momentum scores. So if you are a discretionary investor, you must look for opportunities within these stronger sectors. The weekend investing strategy spotlight, we focus on one strategy on a weekly basis. This week we have a milestone alert on MINNF10. So NNF10, which started in November 2020, has now achieved a 200% plus mark. So it is up 3x since launch. 100 rupees invested here is at 313. The index is at 150. So you can see the remarkable difference between the two uh, 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 charts. The Nifty Next 50 continuous CAGR. So the CAGR has continued to remain in mid 30s in the year 22-23 when it first completed 3 years, and then of late it has recovered back from nearly 15% to near 40% now. Currently, Nifty Next 50 also has recovered back from 10% towards 25%. So there is good outperformance on that front also. This is a rotational strategy of 10 stocks with monthly frequency of rebalance, and you must have a 4 to 5 year view to see the outperformance of this strategy. So the whole idea is that there are 50 stocks below Nifty. Those are very, very strong stocks. They are potential candidates for going and becoming the larger caps in Nifty. And the chunk of their growth comes in before they enter Nifty. Nifty stocks are those stocks which are very mature, which have already, from a very low base made their mark and then come into Nifty. So the idea is to catch the strength of this pocket, which is below Nifty, before they enter Nifty, and that is exactly what this strategy will do. That's all I have for today's GBU. I'll see you in the next week's edition. Thanks. Bye.